you're tweaking a fucked up system to make it a little bit better for crypto, you should be fixing the fucked up system, right? And fixing it for everyone. I'm not a Republican or a Democrat or America Party. I'm on Team Bitcoin. Crypto should not have special treatment, but we should fix the fucked up securities laws. Stablecoins were not supposed to be a thing that mattered. I never understood NFTs. I definitely don't understand meme coins. And the reason why crypto is so interesting, I think.
Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hey everybody, Pete Rizzo, the Bitcoin historian on X, got a great Supply Shock podcast for you today. It's all-time highs. We've got founder and CEO of Cirrus TradFi Custody for Builders, Patrick Murck, on the podcast today. Those of you who are students of Bitcoin history will, of course, know Patrick from the annals of Bitcoin history, a pioneer in the regulatory and legal space around Bitcoin and cryptocurrencies, going all the way back to the Bitcoin Foundation earliest beginnings in 2012 and 2013, and also at the helm of that organization for its formative period. Patrick, welcome to the podcast.
It's my pleasure to be here, my man. It is my pleasure. With the historian himself, it doesn't get any better.
Well, yes, we're both men of history now. Maybe we'll take a moment to reflect on this all-time high, just hitting $114,000 for the first time. Your thoughts, quick reactions. Obviously, you were building in the space when it was, maybe less than a dollar, a few dollars a coin.
It was less than $14. That's for sure. Yeah, no, it's great. Obviously it's great. It's also kind of crazy and we were always hoping for something like that, but actually, sitting here and seeing it all the way up at 114,000, geez, that's pretty wild.
I think back to that early time and sort of like what, we thought, would happen. Like, what would the world be like if you were to ask yourself in 2013, what would the world look like at Bitcoin at $100,000? I would have said that we would have probably seen, more mainstream adoption. I know we're getting there, right? But I think I would have said every merchant's accepting Bitcoin. It's a household name. People are using it. Your thoughts on that?
Yeah. So where are the flying cars kind of thing? Right?
Yeah. Where are floating cities, Patrick?
Yeah, right. We're working on it.
All on the Silk Road, trading all of our commerce peer to peer.
Yeah, it's interesting, right? I was never like a huge price guy, and I'm still not really a huge price guy. It's cool and it's a great validation signal, and it kind of creates bandwidth to do things now that you couldn't do when the market cap was smaller. When I think back, at least for me, the narrative that really stuck with me and why I spent all my time on it and why it was it became like my life, right? Um, it wasn't to hit $114,000 a Bitcoin. And it wasn't to have Wall Street diving into it. It was for people to have more autonomy and freedom in their financial lives. And I think we've achieved some of that, to be clear. And I think we've started a conversation on money and finance that is on very different terms today than it was in 2008, 2009, certainly 2012, 2013. And so those are some serious wins that we can put in the bank, right? It's changed a lot of things about society that sometimes aren't obvious because we're kind of price and Bitcoin and then thinking like that. But even that area outside the scope of Bitcoin, you can see the influence that Bitcoin and cryptocurrencies have had on those conversations and basically really the whole paradigm around, economic activity. That's great. That to me is what it was all about. That was 100% worth it. and all the blood, sweat, and tears that we all kind of put in, and everybody does and continues to, right? Um, what's not as like exciting to me is, the sort of pubco Bitcoin treasury companies and sort of the Wall Street games and things like that. Like, I mean, God bless, but I don't have anything against it. Like, I don't care that much that people are doing it, but I also kind of just don't care about it at all.
Let's talk about the price for a second, because I think, those of us who were there earlier, plus you're preceding me, kind of coming in 2011, 2012. I think back to the writings of Gavin Andreessen, who I think is like really interesting to think about this, right? I always felt when reading what he wrote, that he was somewhat uncomfortable by like how much Bitcoin appreciated, right? Like there's kind of this undercurrent in his writings of being almost, this was something that he kind of mined for pennies, and became so valuable. And so there's this struggle to understand that Bitcoin is this money for the world. It's going to have to monetize, right? Like some people seem more comfortable with that. Do you get a sense that you're more understanding of if Bitcoin is going to monetize to the level of the world using it, then these numbers are just they have to happen, right? Like Bitcoin has to hit $1 million, has to hit some large level simply because of the sheer mathematics, right? Of
Yep.
people holding and the supply and demand aspects of this.
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
Yep. And so that's that sort of like I was talking about that headroom or bandwidth, right? That when you get to these larger valuations, you just create more headroom for economic activity. That's really important. So that when you think of market cap and price, like I get that. That's great. Um, what and yeah, I mean, Gavin for all his flaws, in the later years, was really critical for a lot of things that happened in Bitcoin, happening the way that they did. And I think that I share some of that wariness around sort of the hyper Bitcoinization and like those kinds of things, and like around the Bitcoin treasury companies and things like that. Um, Again, it's nice to create that headroom so that there is the ability for more economic activity to flourish. Underneath it. At the same time, if all the Bitcoin just gets locked up in publicly traded companies, then I don't know what we've really accomplished, right?
Mm.
If it just becomes a store of value that is like basically held by a few publicly traded companies, and a couple of whales, then I don't think we've really succeeded in, at least in Bitcoin specific terms, even if we change the conversation and things like that. And that would kind of be a bummer.
Yeah, my thoughts on that though are, as much as Bitcoin has monetized, and the emphasis is still on store of value, and maybe a few cycles in, we would have wanted it to change, but it's still kind of back there. I mean, I can download a Lightning wallet, I can send you Bitcoin today, and it's still very cheap, right? I mean, on-chain fees are very low, right? So it's maybe not that these things can't happen or won't happen. It's just that they aren't today, and maybe that's okay. I don't know how you think through the fact that it seems like Bitcoin still has all these properties, right? Even though maybe we're not talking about merchant adoption as much. I mean, you as a business can still accept Bitcoin for payment. Some of these Bitcoin treasury companies are accepting Bitcoin for payments, and maybe this is just the way it has to work, where people have to buy and they have to have that. Maybe buying and hodling. They've seen all these stories of people who didn't hodl, right?
Yeah, yeah. No, I mean, there's that inherent tension there, right? And Bitcoin's an experiment. It was an experiment from the beginning, and it remains an experiment. And so I don't have a crystal ball, so I don't know what the correct path is or what an alternate path could have or would have looked like. All we can do is look back and say, like, this is the path it took, and Some of that is like, a roll of the dice, or like the right person got involved at the right time or made a decision. And some of that is just a function of how it actually works, right? How the algorithm actually works and things like that, the scarcity of it and those aspects of it. Um, again, I'm not an absolutist. I don't think it's like you can't have public companies because they're going to foreclose this opportunity. I, I I think it's fine to have both. I just don't want us to lose sight of like what we're really going for in the first place, right? The ability to use Lightning to send payments really cheaply if you needed to, and the ability to be able to actually transact, like have a store of value that you can hold your wealth in, and at the same time transact globally with that store of wealth when you need to. Those are the things that I want to preserve. In addition to the and again, I view the treasury companies as having a purpose in creating the headroom that allows more of that activity to flourish. It's just how these how these bubbles go. I don't want to
Right.
say bubble, maybe the B word's too strong, but you know how these markets go, right? Like everybody kind of just apes into the one thing, and you kind of it's got to be like a balance.
Yeah, we like to take a good
Yeah,
idea too far, and I think the zen that I've hit with Michael Taylor is that, I think he was 4 years ahead of his time on really something that actually is a pretty basic idea, right? I think at the end of the day, his fundamental observation, and this has been dressed up in a lot of, corporate finance kind of marketing and borrowing, kind of using debt and leverage to acquire Bitcoin. But at the end of the day, the observation that most businesses will own Bitcoin, and in a world where Bitcoin becomes money, it's fairly basic. And in the way that I've, often argued this is essentially, and maybe you'll find appreciate this, is, myself and you, and you as well. I mean, every person, no matter their intellect or abilities, who has bought Bitcoin has got ahead that we've watched in our lives, right? And so you could grade these people on a curve, and you could say, who was the most competent, or whatever, right? Everyone who has bought Bitcoin that we know is financially better off than they were before. And so, does that logic apply to companies, right? Because if it applies to companies, and if that's true, right, you don't have to be the best business to get ahead if you buy Bitcoin. That's actually kind of profound, right? That actually just says that businesses can benefit from Bitcoin in the same way as individuals. They just haven't yet. And maybe what we're seeing here with the treasury companies is actually, the explosion of, well, even the startups that you would have seen, right? The Bitcoin Foundation, nominated its books in Bitcoin, was a Bitcoin
yeah,
treasury company.
100%. Yeah,
BitPay and a lot of these early startups, even CoinDesk, bought Bitcoin. It wasn't advertised as something, but I even think about it, right? If CoinDesk had its original Bitcoin treasury from 2013,
yeah.
maybe that company wouldn't have been bought or sold as much as it had, right? It had a significant amount of Bitcoin at the time.
Yeah, I mean, that was certainly a problem with the Bitcoin Foundation, was like spending the Bitcoin too fast was definitely a problem we had there. I mean, there were a raft of problems, and maybe that was a small one,
When you say
but
maybe you
like,
ran the world's first Bitcoin treasury company, it was a nonprofit, but you ran the
uh,
first business that really did try to denominate itself in Bitcoin in the way that these
we
companies did.
everything we did was denominated in Bitcoin, and to be it wasn't just me. John Matonis was there as ED too before I took over as ED, and we did. Absolutely. Everything was in the books were in Bitcoin. Everything was on a Bitcoin basis. We paid salaries in Bitcoin.
You're on
Everything was
Bitcoin
on a
standard.
Bitcoin. We were on the Bitcoin standard for sure. Right. And it was really, I mean, there was a lot of interesting things about that, getting paid 100% of your salary in Bitcoin, and then having to actually go pay your mortgage and for daycare and things like that. So unfortunately it didn't mean there was a lot of hodling, because there was a lot of like translating it back into money so that you could function in the economy, unfortunately. Um, but it was interesting, right? And it was interesting to get paid on one day, and like by the time you actually need to liquidate it to pay your bills, you might be up, you might have gotten paid a little more, or you might have gotten paid a little less. You just don't know, right? So that made it kind of like weird. And we had, three core developers full-time employees. And one of them was like, "Well, I know how much everybody gets paid." And it's like, "Well, how do you know how?" And he's like, "Well, it's pretty obvious, right? You can just map the addresses." And it's like, "Yeah, right. I forgot about that." It's pretty crystal clear when everybody gets paid. So there is
Huh,
definitely a lot of transparency in the organization, for better or worse. But
huh.
yeah,
Yeah,
it
I guess,
was,
if you had some advice for those companies, just to nominate the business in Bitcoin, what are the learning lessons there?
don't spend all the Bitcoin. Like, oh, be be a little less aggressive on the spending and like hold some back because that would have certainly helped a lot. I mean, again, the foundation had other issues that wouldn't have saved the foundation. But it wouldn't have hurt to have some more, some more coin in the bank. And this is that fundamental tension we were talking about earlier. You're talking about hodling and things like that, and you know how hard it can be. In the early days, right? You think of Gavin, right? He had the Bitcoin faucet. He literally was just mining Bitcoin and giving them away to anybody. You just go to the Bitcoin faucet and you're like, "Can I have some Bitcoin to try things out and test it?" And you got free Bitcoin. When I would meet people, like, mostly in TradFi or other fintech circles or things like that, and they're like, "What the hell is this Bitcoin thing?" I'd be like, "Download a wallet," right? Usually it's blockchain, right? Or, wallet. And it was like, download a wallet, it's super easy. I'll send you a Bitcoin, right? And then they have a Bitcoin, right? Now that was $5, right? It wasn't $114,000. I would not be sending that, right? And I kept like cutting it down as the price went up, of course. 'Cause I'm really just trying to send somebody $5 just so they can experience it. And like even Roger Ver, right? I mean, again, he has his foibles for sure now, right? But back in the day when he was still Bitcoin Jesus, right? He would go around and encourage merchants to accept Bitcoin. So he was spending his Bitcoin and it was an investment. I mean, we're all making, in a way, an investment in a future state where more people had Bitcoin, more people understood Bitcoin, and more people were interested in participating both as holders and users, builders, developers, etc. Um, and I mean, I think it was a good investment overall, but at the same time, it's difficult, right? Because especially now with all the price history we have, to say, I'm going to take you over to PubKey, or the burgers are good and the fries are like out of this world. I don't know how they put like,
It's very
I
good
don't
food.
know.
Yeah.
It's very good food, but like the beef tallow fries are insane. So I want to buy those for you, right? And it's like, do I pull out the credit card or the Bitcoin wallet? And it's like, it's a no brainer. I'm going to use the credit card, right? Because there's this opportunity cost of like spending it, and that's like a huge hurdle. And I think it's an interesting challenge that sort of where we are. And yeah, obviously stable coins have risen to sort of meet the demand for that kind of activity, but that wasn't supposed to be the case, right? Stable coins were not supposed to be a thing that mattered. um,
Well, I remember when everyone universally panned them on their launch.
I did too. I mean, I had to change my mind on stable coins. I mean, I held this, strong opinion weekly, but it was a strong opinion that I thought they were dumb for, I mean, a pretty long time. It wasn't probably into 2017 before the light kind of finally, switch finally flipped for me. And I was like, okay, I get it. And even today, I'm like, I'd rather they not be the thing we use. But I understand it now, right? Like
Mm.
it does serve a utility, it serves a purpose. And yes, you could do it in Bitcoin. You could do the same thing in Bitcoin natively using like discrete log contracts and hedging out and like all this stuff. But like normal people aren't going to do that. They just need a simple payment object that they can use in real time.
My new mental model for stable coins, I have a couple things maybe I'll hit you with, but like one,
Yep.
I think the word stable coin is kind of an impediment. It's like a weird, it's like how did we end up with that terminology? And I think if you were to say like what does tokenization, what do stable coins do? It's like you're making dollars compatible with Bitcoin, right? And how it moves. And I think if you had maybe looked at it as that, if somebody had said, "Oh, we're making dollars compatible with Bitcoin," I would have understood it a lot earlier. And I think the other analog that gets me a lot is that there's a way the existing financial world and the Bitcoin kind of crypto worlds, are going to coexist for a while. And I think an analog that doesn't get thrown around a lot is the printer, right? It's like, so the printer was this bulky thing that, companies made millions and millions of dollars selling printers. They sold ink, they sold paper. And this was because, not everyone was on the network, right? So sometimes you might have to print something out and mail it to somebody because they weren't on the network, right? But it took us a while to kind of figure out how powerful they were. And I think, they kind of fell in that nice category of no one taking it seriously, as you said.
And really it comes back down, and I think my biggest objection was always that you were trying to build these like trust minimized systems, and like there's nothing more trust maximized than a stable coin,
Oh, right, yeah.
right? And it's like it's really the antithesis of what you're trying to do.
Mm.
Now, that's old thinking. New thinking is like, I get it, I understand it. We are trying to build trust minimized systems. However, if you want to, and the printer is a great example. It's a great one because when you want to act, it's cool to have a utopia over here that's very trust minimized systems. But when you
Mm.
need to actually interact with the real world,
Right.
you just
Print.
have to establish some sort
That
of
that's
trusted relationships.
hope that it prints out, right, yeah.
Exactly. Exactly.
Well, before we turn the page on, kind of what you're doing now, I did wanna touch on the regulatory stuff. Obviously, you were a pioneer in evangelizing Bitcoin in Washington, DC. That's changed so much, even since our last conversation, in October, November, before the election. You were in Congress talking about Bitcoin when it was $100, less than $100. You were having some of the very first meetings with people in Congress. What's it like to see Bitcoin where it is today, where we might have three political parties that are
I know,
jockeying
right?
for Bitcoin attention, depending on what happens with Elon Musk, right? It does feel like the Bitcoin and crypto world is like a powerful political, entity at this point.
There's no question that it has uh, maybe even outsized influence when you really think about it. But it has. I think that generally the industry has started to play the game and play it well, um, and you can see the results of that. And I kind of like how David Bailey talks about, he's for the Orange Party. In other words, it's not, I'm not a Republican or a Democrat or America Party. It's I'm on Team Bitcoin, right? And I think of myself in the same way, right? And I think that's the right lens to view it from. I'm not a single issue voter, right? That's not my exclusive priority and what I think about societally or politically, but I think it's important, right?
Yeah,
And
there's a few nits maybe I would pick out. I'm curious for your
yeah,
opinion because there's predominant idea that the government prior to the Trump administration was hostile to Bitcoin. Obviously, in the Biden years, I think later years that was very true. I go back to early examples like FinCEN like coming out with some guidance that actually I think has held up fairly well in terms of designating Bitcoin as a commodity and like being very clear about these things. I mean, maybe since you have the, history here of the early legal stuff, what were the early things that were done that was good? Because it's not black and white, right? It's not like the government hated Bitcoin forever.
it's definitely not black and white, and it wasn't a monoculture. So even in the early days of Bitcoin, you had very distinct views about it. And I remember, going to visit Elizabeth Warren staffers in like 2014, and while they weren't like embracing it, they weren't hostile, right? I mean, now they're super hostile, but you know, they weren't always, right? And so people get pushed into corners for various reasons. But it was not a monoculture. So even within the Treasury Department, you had different competing views on whether this was a good thing or a bad thing. And that persists today, right? That is still the case. And you can't really even go administration by administration and say, well, Obama was bad, Trump was good, Biden was bad, Trump was good. That's not true, right?
What do you think were some of the wins during the Obama years and maybe the setbacks in the first administration for Trump?
So, I mean, you have the FinCEN guidance, right? You have, I think that was a clear. It was really interesting to set this up, right? So, um, FinCEN had been like looking at digital currency since eGold and like PayPal way back in the day. And then you have sort of post Patriot Act, BSA requirements and things like that. Um, so you have FinCEN who's already got an eye on this, and they have two things happening. They have Liberty Reserve, which was not a crypto anything; it was its own. thing out of Costa Rica, and it was like I think it was like two guys from New York who got busted for, illegal money transmission, and then moved to Costa Rica and were doing illegal money transmission. It was like a super sketchy site, and like the KYC was like, you can put in Donald Duck and you get through the KYC, and there's all sorts of really just you know not not good activity, right? Like running through their payment network. And then you also had the Silk Road, right? And whatever anybody thinks about Ross and the Silk Road or whatever, it was problematic from a Bitcoin adoption perspective, and helpful, right? At the same time, right? It was a contradiction in a little bit of ways, but in the very early days, it was probably helpful in like creating like a base, but it became more and more of a problem when you wanted to actually go and bring any sort of mainstream people into this. Um, and so you had those two things happening. So FinCEN was taking action against Liberty Reserve. They filed a special measure against Liberty Reserve, which basically means they cut them off from the entire global financial system. They can say anybody who does business with Liberty Reserve in the financial system is hereby cut off from the US market completely. Right. And so that is effectively a death sentence to any financial company because nobody's going to do that. Nobody's going to lose access to all the global tier one banks and even the tier two bank and everything like that. So when they take special measures, it's a serious thing when they do it, and it doesn't happen often. It's an interesting process because it is not something that just happens. It is more like a rulemaking. So what that means is they have to follow rulemaking procedures, which means they have to put it out for public comment before it's enacted. So they put out for public comment, we're going to take special measures against Liberty Reserve. We saw that at the Bitcoin Foundation, and we said, people usually do not file comments in that. As you can imagine, it's kind of crazy to do it unless you're like pat on the back, like because you're not trying to draw heat.
Mhm.
But we filed a comment as the Bitcoin Foundation, and that was sort of like first move. Um, and that's how we put ourselves sort of on the map from a DC regulatory perspective. And our argument was not pro Liberty Reserve. We were like, fuck those guys, right? Like, but we were saying, like when you talk about their digital currency, be clear you're not talking about Bitcoin, right? These are fundamentally different things. They're fundamentally different concepts. One is, decentralized, trust minimized. One is trust maximized and centralized. And like they're just totally different paradigms, and you should not treat them the same. That was basically the point of our sort of comment there. Um, then moving forward, I'm in DC talking on panels. I meet the director for FinCEN, and we kind of like talk, and then go do some meetings with them. At the same time, they're issuing what I agree actually were really um, pretty well drafted, even though I had my problems with it at the time, but generally well drafted guidelines on how they're treating Bitcoin. And what it did is it created a clear path, right? This is how you can operate within the rules. And it said, Bitcoin, if you're doing these types of activities with Bitcoin, you fall under money transmission as a category. You register as a money services business specifically under the money transmission category at the federal level. And then this is how you report all these different things. Here are the best practices book. So now it's like you have a playbook for all the exchanges out there. Oh, okay. Now there's like a rule book for how to do this. Prior to that, you have like, Coinbase and BitInstant and, Kraken. Like it was like you were guessing at what regime you fall under, what you didn't. It's really funny if you go back and look at the original, I think it was the very original Coinbase terms of service. It's super funny. Clearly like more of a YC thing than it was like a mature company thing where they have in their terms of service. It's something like you hereby like, warrant and represent and warrant that, we are not a money transmitter or something like that. As if like in the end user terms of service, you can like just wave away all the money transmitter stuff. It was cute, and it didn't, obviously wouldn't work. But that was like the level of like, we don't really know what to do with this. With BitInstant, um, uh, I think they filed as an MSB under prepaid access provider, which you could make the argument that that actually is a more correct category than money transmission. It's just not what FinCEN picked. But once you get the clarity, it's great. You can flip over. And what happened is then it unlocked funding for Coinbase, funding for Kraken, and like it just gave you that clear path. Um, and so that was under, Obama, right? And um, at the same time, there were people at that exact moment in time in Treasury and policy who really, really wanted to shut Bitcoin down. They had like no interest. All they saw was that Silk Road thing that was still out there,
Yeah, I
right?
remember being at the NYDFS hearings, and there was an explicit appeal by the, kind of law enforcement wing to come out and say, shut this down.
As part of that activity, right, I formed a relationship with Ernie Allen at the International Center for Missing and Exploited Children, ICMEC, which is, a law enforcement NGO and not something that you would normally consider to be a friendly kind of place for, Bitcoin when it was thought of as the currency of the Silk Road, right? Um, but it was very important. And I took some flack for, even doing this stuff, right? Like, because you can imagine on Bitcoin Talk, people are like, why are we talking to the, this is these status like people or, whatever, right? And, but and I mean, it was important, at least in my mind, it was important. And I think it played well, right? Because what we ended up happening is we formed this digital currency task force or something, and you had people from Treasury policy, you had people from law enforcement who were very passionately anti-Bitcoin because they saw like the worst side of it all day long, right? And then you had people in the middle, and it was a big tent. Having gone to those meetings and just engaging with it and saying, there's bad stuff, there's good stuff, but think about like what economic freedom actually could mean for somebody, right? And you can start speaking the language of that's common between you, right? Because when you talk about like ICMEC's goals, they want to get people out of bad situations. They realize that like, you know, economic hardship is what drives some of the sort of exploitation that happens around the world. And if you can get people more opportunity to like have their own sort of autonomous economic relationships, then you can really cut down on like the opportunity for exploitation. So when you start talking like that, you start talking their language, right? And that's a common goal that I think we all share, right? You, me, them, everybody. Like that's not maybe not Elizabeth Warren, but like, most people that I care about, right? And so what ended up happening is when we had the Senate hearings in late 2013, which by the way, we hit an all-time high when I was talking at the Senate hearings.
I
There's like
remember editing that article.
yeah, I think it was like $1,000 or something.
I think
The
it was that. It was like $300 or $400 because the peak came in December. That
yeah,
was
that was
October.
almost yeah, maybe it was 800 and then it went up to I don't remember.
I
Anyways, yeah, the
remember
hearings were in the fall, but
the U.S. Senate hearing was a Bitcoin love fest. I remember that. There was that classic headline from that. Yeah.
well, but that's the thing because everybody thought it was going to be a bloodbath because it was titled like the Silk Road, moving beyond, and all this stuff. And what ended up happening is on the first panel, you have the director of FinCEN who's like, we got this. We don't need any new rules. We got this under control. Our guidance is good. We've gotten good SAR reports from everybody. Like it seems to be working just fine, right? Just cool it down. And then on the second panel, which was Ernie Allen, then me, Jeremy Allaire, and Jerry Brito. Ernie is the first person to speak, and his entire message was don't snuff this out. This technology could be really important, and we don't want to have draconian regulations like snuff it out early. That didn't happen by accident, right? And I can say that all day long. They expect me to say. They expect Jeremy and Jerry to say that. But when the head of like a very powerful law enforcement NGO says it, that just carries like way more water than any of us could. And so so it's important to have those conversations. That was the situation back then, right? It was a lot of like, initial negative reactions because they're hearing all they hear about is the Silk Road, and then you have to really spend a lot of time engaging. The scene today is totally different. People are very well educated on not just like the philosophy and alignment, but like deeply technical at this point compared to where we were.
Well, let's talk about the Genius Act and market structure and Bitcoin Act, as we're going to get this kind of march of new bills coming, and hopefully, maybe even the Genius Act passing in a couple weeks. Maybe let's talk about market structure, because I think that's the one where I'll be honest, I'm not really optimistic based on some of these initial
You shouldn't be.
kind of. Yeah, I should be.
You should not be. I don't think. If you want to see it pass this year, I think you should not be optimistic. I don't think.
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research. I think we sort of in the rush to get kind of Trump elected, right? There are still deep kind of divisions between the different groups within the Bitcoin and crypto space. And I think with market structure, that's where that stuff really starts to unravel, right? We
Yeah.
get into like what's a security and what's a commodity and what's not. And you can kind of feel in those meetings that it's going to be hard to reach a Schelling point in terms of, because that hasn't happened organically, right?
If what you care about is Bitcoin and you don't care about anything else, then what's the problem? I mean, there's like little things that you might care about, tax treatment, like, having a de minimis exchange amount, because it's another like weird perverse rule that makes you need, feel the need to hodl because you're buy coffee and you pay cap gains. That's crazy, right? Um, but they're like, these are like little issues, right? Compared to the rest of crypto. And we get into like defining securities and what is and isn't and all that. Bitcoin, we already know is not a security, it's a commodity. Like, so, I mean, we're straight. I don't, what do you need, right? These are solved problems.
Well, and then the interesting thing I would say is that, you're starting to see a blend of other things where, you talk about tokenization, right? There are now stocks that are being tokenized and like put on blockchains, like traditional securities, right? Are now like this has happened in the last maybe couple months, and I feel like people haven't really caught on to it, where your Krakens and your Geminis are, today you can trade fractional shares of Tesla within a self-custody Solana wallet. So you really, the securities regime seems to be, well, I'm curious your thoughts on that, right? Because I don't know how to think about it, right? Because there are securities now trading within the public crypto ecosystem. And so, with the tokenization side of it, with people who want tokenization, it's like, how does this resolve, right? Because on one hand, it's like, you look at these companies and they're following the securities process, right? Let's just take a share of MSTR that trades on a lot of blockchain is a registered security that's trading on a blockchain, right? So some of this is actually maybe being resolved in practice. I guess that's what I'm asking, right? Is some of this actually because
Like,
don't we
do we
want
need,
these,
yeah,
well,
what
because
do we
don't you
need?
want tokens to have disclosure, right? Like this has been one of the things that I've always, a big powerful driver of, how my, kind of view of the space has evolved is I really hated the ICO era. I hated almost everything about it. I thought it was very
Yeah.
duplicitous. I thought, the issuers and the way the issuance happened was just really unfair to the public. I thought there was really bad information on all sides. And so for myself, it's I want to see kind of more, of this disclosure and regulation on the crypto industry. I've always wanted that. And so, as I look at something like the market structure bill, I don't see ideas of like, it's like, how do you solve these problems without reinventing the securities process? I don't know. I've always felt like it's going to be hard to do.
So there's like two different things here, right? And it's hard to keep them balanced, right? In even in my mind, anyways, right? So you have general securities laws are fucked up, not crypto, just in general. And then you have the application of fucked up securities laws to crypto, right? And those are pretty distinct things. And what happens is, and I think it happens in these bills, and it's why you get these like, oh, why should crypto have special treatment and all that. And it's the answer from my perspective is crypto should not have special treatment, but we should fix the fucked up securities laws, right? And so for me, it's less about a crypto market structure bill, and it's like, why can't we have a general let's fix the fucked up securities laws like bill? Because that's what really we need to do. Crypto will benefit from that for sure, because it's just there's
What
lots of
do you feel like the
efficiencies and
problem with
access issues.
securities laws is then generally? Like, what do you think the general problems are, other than maybe like the investor, registered accredited investors and stuff like that?
But that's a big problem. You can't hand wave the accredited investors. It's a
That's, yeah,
huge, yeah. I mean, you can, but like, we shouldn't, right? In the sense that, I mean, it's a huge, huge fucked up problem, right? When you think about, and crypto is such a great example. I go to these like sometimes like these wealth conferences, and I talk to these like old timey wealth managers, and I mean they're young people sometimes, but like it's just like old school like traditional practice, like registered investment advisors. So, and they're like, oh, what's the crypto da 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 da. Like we gotta like we need to get like a 25-year-old and then like diversify their portfolio across like all these different things, and then they slowly compound their interest over time. And I'm like, brother, that is not the game anymore. You're working with a outdated playbook, right? That is not how I've seen wealth be accumulated in my life, right? What I've seen are people who, get equity in things like early that take off, or they got into crypto and it took off, or, something like that, right? And the common thread was when you're young, you need to take big swings. You need to take big risk. You can afford to take big risk. You can afford to lose. You can afford to recover. By the time you're an old guy like me, it's like a little bit different, right? Because now you need to be like socking it away, and you got kids to pay for and things like that, college funds, whatever. But when you're young, you need to take big swings, right? And that is not how the system is designed. That's not how financial advisors think generally. Um, and it is not how the laws, including the accredited investor rules, are structured. The accredited investor rules specifically are the inverse of what I just said what the playbook we should be running right now. And the reason why crypto is so interesting, I think, not the exclusive reason, but one of the reasons is if you are Gen Y, Gen Z, whatever we're calling it, um, I mean, that's what a Gen X person says, right? Like whatever these other
Pretty sure I think Gen Y has not been something that's anyone said to me in those quite some time.
is that millennial or something? I don't know, whatever. I
Gen
mean, I
Y
just know
millennials, and then the Gen Zs are now like they
the
inherited
Zoomers or whatever.
the
Now we're
Zoomers. Yeah.
alpha or something. Yeah, I don't know. Anyways, whatever. I'm Gen X. Nobody cares about me. I'm Gen X. We're just like the lost generation anyway, so I don't care about them either. That generation, right? They can't participate in the same way except in crypto, right? Crypto is the area where you don't have a lot of these rules that impede your ability to take big swings. So you can take big swings, right? Now you can also join startups and get early equity. But man, like, why wouldn't you like degen in and hope you hit a score? I mean, I don't think there's a lot of productive value to society in that, but on an individual level, I can certainly understand why people are doing it. It's a rational decision.
I still don't understand, and I've talked to a lot of people in the crypto space about this, especially reconnecting with Blockworks and the people in the crypto space, outside of Bitcoin. And it's sort of like, there are all these ideas for all these years about what crypto beyond Bitcoin would be, right? And I think, you can take that great mass of ideas and say, the great majority of them, haven't kind of shaken out. And so it's, I don't get a sense for what they want to actually go back. Like, what do they want to happen? What's the ideal structure? Because it's not the case that people are launching innovative blockchains and cryptocurrencies anymore that solve problems. That's not a thing that's happening. It's not saying it
Yeah.
can't happen. It's not happening in abundance, right? There isn't this great. If we thought the cryptocurrency market was going to be this great thing with a million inventions, it's looking a lot more, I think, like a handful of things that are useful. I talked to Ryan Selkis. I had a long podcast with him about this, where he's at. he said it was, well, it's the regulations. It's the fault of the regulations. If we just change the regulations, then we'll be able to fix crypto and we'll have all these things. But I still don't get a mental picture of like, what's like, what is the crypto side aspiring to? I feel like I've lost that picture.
Yeah, it probably won't be the only thing I disagree with Ryan on, but I think there's two things. One, I think blockchain technology, generally speaking, is marketplace technology, and so it's good for that, and it's maybe not good for like turning on my light bulbs, right? And so I think there was a lot of turning on my light bulbs kind of thinking, and like that washed out appropriately.
Hmm.
And
And the
I'm glad.
Bitcoin miners and light bulbs, right? Like me and you lived through a time where that was
Well, I
a
mean, that's a little different. That's kind of cooler, but but yeah, yeah. But you know what I mean? Like there was like the, walk and the step in or whatever. You like walk and get like like those should be washed out. Like and it's good that they're gone. And I'm glad people aren't trying to recreate those. What would I like to see people building? More marketplace technologies, right? With that are trust minimized. AI sort of like marketplaces, like data marketplaces around like training data for AI, things like, and it doesn't just have to be AI, but like those are like things that I think are really interesting and may be a layer two. Maybe they're even a layer one, or there's something there that is still to be unlocked. And I think trust minimized solutions to unlock it are not a bad idea, right? Um,
Well, I think one of the things, you mentioned the Bitcoin treasury model and being wary about it. Again, we're talking about bad terminology here. I think another interesting way to think about that is like, you have these companies can launch different products, but now in a world where, their stock is backed by Bitcoin, you have a lot of properties of the crypto market that people kind of used to like. You can create a company, that company can have a service, it can acquire Bitcoin, and then there's some sort of relationship between this arbitrary asset and Bitcoin and Bitcoin, right? And so I look at the Bitcoin treasuries market. And I'm saying, okay, a company that's doing AI in the way that you're talking about, maybe there's an AI company that's going to then hold Bitcoin, and then their shares are going to be in some way tied to Bitcoin. That starts to look a lot like what the crypto market wanted to create, but without the infrastructure of like recreating blockchains and then recreating all kind of redundant kind of stuff. So I don't know. I almost feel like the Bitcoin treasuries part. It's sort of like in a world where you can launch a Bitcoin treasury company through a SPAC, put it on a blockchain, and that can sort of trade, as a token globally on any rail, right? Right now, maybe those rails are public, maybe they're operated by some banks in the future. As long as they're on some sort of rail, uh, yeah, I still don't. There's this idea that we're going to return to the ICO mania, right? Pump fund, it's coming up, right? This is the big sale. Everybody's saying, we're going to be, it's going to be the return of degenning. But I feel like that era is over. I don't see that era coming back.
that's fine, right? Like I won't miss it. I never understood NFTs. I definitely don't understand meme coins. I understand NFTs to the extent that like, I mean, I've like watched my son play Fortnite, right? And so like I understand how you can get into digital objects, or like not me, but other people. I know what collectibles are. I know what they mean to people. I certainly have things that I'm like analog because I'm old, but like, I get it in that sense, but I don't get it in the sense that I'm not going to go buy an NFT and I'm not going to go buy a meme coin, right? Do they have any any future at all? Like probably. Is it like this huge overhyped like massive like market? Probably not, right? There's probably some grain of something in those ideas that will persist and be interesting. I don't know how big it will be. It just doesn't speak to
And
me,
now
so
it's
it's not like my
stablecoins,
thing,
right? Like
right?
you can do digital commodities with the stablecoins. It's just that, I guess the question is like, what's the future of like arbitrary crypto assets, and like how much of the market structure bill is kind of predicated on this idea of like, because that was the great coin market cap dream, right? Is there would be millions of arbitrary assets of cryptocurrency that would all be beautiful and special and unique and valuable. And we would want to have them all.
Right. And I mean, listen, that's my business now, is linking like real world productivity to the blockchain. Really, if you fundamentally think about it, right? We hold traditional assets for builders who are tokenizing those assets, whether it's treasuries, public securities, private credit, whatever, right? And that's sort of what we're talking about. It's like taking the best of both worlds and mixing it up. So I'm with you in on this, right? In the sense that like having just arbitrary tokens that don't mean anything, like this is what I'm saying. I don't get it either. I'm just saying that I'm not ruling out the entire category completely as if there's not
Oh, no,
something that could
I
possibly
agree
in it.
because
Yeah.
we've seen like crypto dollars make a lot of sense and crypto gold and like, again, but I think that that looks like making real world assets compatible with Bitcoin and the liquidity in the crypto space, right? But I think the liquidity in the crypto space outside of Bitcoin is, diminishing, right? It's like, sure, it's like there might be some value in some of these. I don't know, right? We talked a lot about network competition. It just feels to me that we're going to have a crypto dollar system. That's it's going to be crypto rails, but there will be fundamentally a stablecoin apparatus. I kind of call it the crypto apparatus, and that'll look like a modern Walmart. And then Bitcoin will sort of be the Amazon, and we might be in a situation for a while where these two systems are kind of competing against each other. And I don't think there's a problem with either system, right? I think both have their uses. It's just that one of those systems, has the built-in thing of expanding U.S. hegemony and global power and all that stuff, and
Right, right. I mean, for better or worse, right? I mean, that's why it's like, the Genius Act passed and why it got through and why that was so much easier to pass than the market structure bill is because you get your head around it's a really easy story to tell. Like, why would the US not want to encourage this, right? Like all it does is been as long as the US dollar is the reserve currency of the world, we do not have to worry about our debt, no matter what Elon says, right? As soon as we lose that status, we're fucked. So, of course, you're going to project like dollars everywhere in the most efficient way possible. I mean, that should be a no-brainer. Market structure, yeah, it's just a totally different thing. And it's like, and I think there are more competing interests than just like Bitcoin doesn't care. And then there's these other things. I mean, obviously, within the other sort of communities, there's still like, I mean, there are people who are very much focused on building on Ethereum, Solana, like more trust minimized systems, and who value that and don't want to see a market structure bill that kind of impedes the ability to build decentralized systems and to have like autonomous systems that exist that aren't like stifled by like having to file forms and create some sort of personhood entity or something like that. And I mean, there's something to that, right? There's something to that critique. And I think it's a healthy tension. And you want that balance where you're preserving the ability to build these autonomous systems and to build like these trust minimized systems while at the same time making sure that retail and like users are protected when trust is involved, right? This is like you can go all the way back to 2013, 2012, right? What I always said was like regulation follows trust. If you can build a fully trust minimized system, you don't need regulation. Whenever you have trust involved, you're going to need to be regulated, and you should be regulated, right? And that's the balance. What that tells me though is, right, and I think it's really clear, you cannot get market structure is not going to be you just can't force it through just because Genius passed and the political like situation looks good for you, because those issues have not been resolved. This thing probably needs, honestly, like a couple of years of like, just like Genius, the actual stablecoin bill took, I don't know how many years, right? To actually get banged around, knocked around until it got into the shape it
well, the
was when it
argument would be
passed.
that at 21, and there are earlier iterations of the market structure bill, right?
Bit
And it has
21, but it's been kicked around, but not nearly as long, right? And it seems like there is still, and it's much more complex. And the political side of it is much more complex because you're not projecting dollar hegemony, right? Like you're doing something different, right? And again, keep in mind, right? You're tweaking a fucked up system to make it a little bit better for crypto. You should be fixing the fucked up system, right? And fixing it for everyone, right? That's what we should be, in my opinion. I think it's fine. Like if they want to pass a market structure bill, that's great. Like I have no problem with it, especially if it's got good rules and it's thoughtful. And I think it eventually will get there. I just think it needs to be kicked around more first. On the other hand, if I had my druthers, I'd rather spend my time just fixing the fucked up securities law framework that exists entirely. And that does include accredited investors. It's like the 100-person cap on like private issuance. There's like, what kind of disclosure should we be having? What's a meaningful disclosure anymore, anyways? I mean, like, think about how much disclosure there is out there, and people are still buying like GameStop and shit like that. Like, I mean, is just I mean, I'm glad we have disclosure, and certainly people can DYOR and caveat emptor and all of that, and I'm a believer in all of that. But like, it also tells me like maybe we're not disclosing the right things, right? Or maybe like the disclosure regime isn't really working the way it's supposed to. I think there's a lot to think through and fix, generally speaking, in over there. Um, yeah, and remember the worst of the SEC was under Jay Clayton, under Trump 1, not under Gensler. Gensler was bad. Clayton was maybe not as vocal and visible, but he was arguably worse. And he also thought every token was a security, and he went after a ton of them, including the Ripple case, which Clayton filed and Gensler inherited. Now, Gensler had a heel turn because I think FTX blew up in his face, but like, you know, I think people like forget how bad it was before.
So with your new startup, with what you're doing with Cirrus, where are you trying to fit in? So it sounds like you're trying to give people tools to, from the traditional finance world. You're interested in real world assets. What are you building? How are you working with different folks?
On to happier topics. Let me chill now. That's great. I love it. Everybody should listen to my podcast, Form and Structure. We talk about really nerdy things, and I help put people to sleep at night. Okay. The Surus is great. So what we do is, again, we provide like traditional asset custody for builders in the ecosystem. If you wanted to issue tokens that represent real world assets. I don't really like real world RWAs as a term, but like, maybe we're stuck with it. Asset backed tokens. We're happy to do the TradFi piece. We have a trust company that we chartered in North Carolina. It's operational. We have customers today that are very happy with us. We can acquire pretty much any asset you want, on the TradFi side, whether it's private credit funds, private credit directly, treasury bills directly, money market funds, sweep funds, public equities, private equities, whatever you want, we can get it, and we will put it in an off-balance sheet bankruptcy remote trust vehicle, so that when you have your treasury token or whatever token, it's off of your balance sheet and it's off of my balance sheet. So if you go under or if I go under, the token holders have the assets underlying that they thought they were getting in the first place. It is not just some wrapper.
Maybe I give you an example. I don't know. Say I sell REITs, right? I don't know, my company. I get a bunch of people to invest in my real estate operation. I come to you and I say, hey, I want to do this offering for this real estate venture. I want to tokenize the shares. So you're creating the structure, the legal structure for that, and then I'm ending up with a bunch of tokens that I put on some blockchain.
Exactly. So we can do it however you want. We can do it soup to nuts, full white label all the way, top to bottom, where you say, I want to market and distribute this thing, and I want you to do the rest. And we can do a private white label security token where we handle all the blue sky filings, all the securities law issues, the disclosures, and including the transfer restrictions, which will apply with the security token, which means you can't just freely transfer it. So we will do the accredited investor verifications and all of those different things. We'll do all of that. You go market and distribute, pull the capital together, and make the business happen. And you don't have to sweat like all this boring like bullshit. And we'll put it into a bankruptcy remote trust to hold the assets. If you want to do all these other things, then that's terrific, and we can just hold the assets, and not do any of the other pieces of it. And you can issue your own securities.
How do the assets end up on a blockchain on the blockchain markets? Like, how does that, or does it, or is a separate kind of, trading entity, like an interface that I'm not on the kind of public blockchain?
So we're blockchain agnostic. So we will issue to whatever chain you want us to issue it to. It could be Ethereum, Solana, Bitcoin, whatever. I don't care. I love the idea of issuing stuff on Bitcoin, by the way. It's like, but I'm crazy or something.
Okay, people have been away at it for a long time out there.
I think it's gonna happen. I think it's gonna happen, and I think it's gonna happen sooner than you think, and I think it's gonna be amazing. Um, but neither here nor there. To your question, again, it depends on what is allowed under the regulatory regime. If you're issuing a security in the US, we will issue it on whatever chain you want, but it will be a walled garden because of US securities laws. It's just the way it has to be. I don't have to like it. It just is what it is.
Right. So what's the benefit of a token in a walled garden versus that's what I was saying. If we live in a world right now where I can trade master and you're in Africa with somebody peer to peer over Solana, it's like what's the point of the
What's
garden?
the point of a walled garden token? It's a great question. It's certainly not as valuable as having a freely trading token, which I would prefer, but we got to live in the world that we live in, at least for now. Remember what I said? We got to change the fucked up securities laws. This is part of it, right? Um, but it is what it is, and that's how it's going to be. Um, so what's the value? You still get like it's a different kind of access for people. You sometimes get access to alternative and novel assets that don't really exist on the TradFi side. You can do different composition of assets. You can do things like you said you're going to do your real estate venture. Well, maybe it's not quite a traditional REIT, right? Maybe it's something a little bit different. Maybe it's like you're running a multi-tenant unit and investing the proceeds in Bitcoin and so it's like a multi-tenant Bitcoin treasury. I don't know. We've seen some really weird stuff and really cool stuff, right? And we've been working with, some companies on some really novel alternative asset schemes that really just don't exist anywhere else. So maybe you could do it on paper, but they don't exist on paper and they don't exist in coin, and now they exist in a coin. So that's where you're going to get it. Two, can you use it as collateral? Potentially, right? So even if it's in a walled garden, if you can lock it up into a walled garden wallet, that doesn't mean that that's the end of the story, right? So you can still use it within the walled garden as collateral and something that then extends beyond, right? So it does have some advantages, but it's not as clean a story as like saying we've created a stablecoin and we can just use it, right? I 100% agree with you there.
We're seeing a mixed compression, right? It's like even today, like a year ago, there was a big difference between Coinbase and Robinhood and Kraken and the traditional financial markets. We now are it's very clearly that's kind of crunching down into whatever this network thing looks like, right? Today, these companies now look the same. And so, is the progression here? It's just like, then, okay, then we're going to take the banks and eventually they'll kind of squish down and we'll be left with the network. Then the question is, well, what does the network look like? Right. I don't know. I don't know if that's even a question. That's just an observation about, it seems like we're seeing things develop directionally, but it's still so hard to like for me to even visualize them or mentally, keep track of like where people think that they're going. Because I acknowledge that we're making progress, right? Like even just that idea that the alternative exchanges, internet exchanges, crypto and non-crypto today are the same business. And so clearly something's happening. Clearly there's a movement towards something happening where people can custody all kinds of assets, trade all kinds of assets. The hard part is understanding like on the back end, and this is where I think I'm always at the trouble is like, okay, we've built all this back end infrastructure and that's still competing. And it still doesn't feel like that is, a solved question, right? So simultaneously we're progressing and things are getting better for the end users, but then the back end infrastructure still feels like it's confusing. Like, I mean, Ethereum 3 years ago, I mean, it was the consensus thing. Everyone thought it was, and now it's, in the doldrums. Nobody wants to talk about it. It's it's the, what do you call it? The
Well,
trough of disillusionment.
I wouldn't write any of those things off yet exactly, but I mean, I understand, right? And there's definitely a like abstraction layer that needs to happen in order to bring a new cohort of users on into the system. It's a huge opportunity for whoever can crack it. Really, that's the answer, in my opinion. Um, I don't sit there and when we're talking over email, right? I'm not like, I love my SMTP, right? Like nobody gives a shit, right? And I'm not sitting here comparing like Signal versus Telegram in terms of like network architecture, right? I just care that it works. And I think we need a little bit more like real world product thinking in the space and less like, I love all the Bitcoin stuff and I love all, the degenerates and all that. But like it would be great to have some real world product people who are like, I'm gonna solve this discrete problem and I'm just gonna abstract all this shit away and just make it dead simple for people. Cause they just kind of want to push the button and see it go. That's what most people really want. Um, and if I can do that and the system helps me do that in a better way, then that's good. And if it does it in a way that also empowers those people a little bit more, even if they're not quite aware of how that's happening, that's even better, right?
Yeah, I think, it's there, we kind of see things through our own lenses, right? And I think, the question to me really though is, it's like where does Bitcoin end, right? Like does it become, because at the end of the day, like Bitcoin is a database that I'm putting my time and energy in that's competing against other databases now, right? And that choice is meaningful to me, right? It's like I have to make the right choice, or I have to, or there's an economic consequence to my choice, right? So if I'm someone who's living now and I'm putting my dollars in the U.S. government financial database, I've seen that everybody in the Bitcoin financial database is advancing, right? So there's this. It's not zero. It's like a zero sum essence to economics, right? At the end of the day, like some of these systems will benefit the people who are using them, and some of them when we won't. So I don't know. Maybe as we conclude our walk here, our ambling trail through the past, I guess how do you think about, as someone who has been, because you were a primary participant much longer than me, right? Like I kind of dabbled with Bitcoin early. I sold off, but you were kind of living and breathing in the system. I'm curious, like how you think about, just the idea of, your financial life being, in Bitcoin, so much of it.
Yeah. Well, I mean, I wish more of it was, to be clear. um, I, it'd be a different lifestyle, but
Even though you're taking your salary in Bitcoin
yeah, but I was
and
also paying my mortgage and paying, I mean, like, for childcare and like everything else, right? So, I mean, that's the thing, and I think you've probably talked to a lot of people who've told you the same thing. It's like it's easy to look back and say, "Oh, I should have just held on to everything and just ate ramen noodles all the time," but nobody did that, right? So
some
I think it can be misleading sometimes to be like, "Oh, you were early, therefore you're just sitting on some huge like dragon hoard." It's like that's usually actually most of the early people I know who weren't already rich first, like didn't have that experience, right? I think there were some dentists out there who just filed away like some Bitcoin, and they probably did really, really well. Like the people who are like spending their whole lives working in it, and that's how they actually earned their living. Like, and they had to pay real world things. And I mean, yeah, Andreas was it was a good example of that too, I think, right? And other people. So I think it's a little bit like, but anyways, neither here nor there. To answer your question, right? Like, I think the thing that I would like tell people now, especially people who are like first or second cycle into this. So when I came into it, I was the new guy, right? I was part of the new wave of people who were coming in to crypto. It was like from like Marty Molmy, and like,
you're Gen 2, I'm Generation 3. That's how
yeah,
I
something like,
like
yeah, right,
post 2011. Pre 2011 is really Generation 1. There's just, that's how I
totally.
class different generations. Yeah.
Yeah, and I was the new guy, and like I had to pick it up and all of that. And then I've seen the generations come behind me, and there's two reactions you can have to that, right? I think there's one reaction is like, I was here first, and I'm trying to like, and not even just coins, but just like even like mental share, right? Like I want to own this part of the ecosystem or something. I think that's obviously like not a solid approach. I think it will turn out badly for you. I think that's what's happened to some of the people who have washed out is it's really that kind of thinking like I was here first and therefore I have authority. And that's bullshit, right? The other is to say like, hey man, you know what's great about these next generations? They're smarter than me, right? It's usually like the people who came in after me who are like way more qualified than I was, right? And it's like awesome because they're going to take this torch and they're going to run further with it than I could. So that's just good for me. It's good for what I was trying to do in the first place. Like, have at it. Like, I want to help you and I want to get out of your way, right? That's kind of my attitude towards like all the generations that have followed me. And I think that's the healthiest way to think about it. I mean, even if it's not in the financial sense, like, I mean, I'm benefiting from all the people who came after me, like the Peter Van Valkenburgs, right, of the world. And and it's great, right? Because they're taking that idea that I wanted to move forward. I moved to Boulder a little bit and he's pushing it even further. And people will come behind him and keep pushing it further than that. And like that was the goal. That was the point, to change everything, you know?
Beautiful, man. Patrick, where can people find more about your work, follow you on the internet?
Form and Structure is the podcast, Spotify, Apple Podcasts, and go to surus.io, surus.io. There's a nice elephant on there and you can say hi. I would love to hear from you.
Awesome, man. Always love our catch ups. And again, happy all time high. For those who are listening at home, we'll be at Digital Asset Summit London coming up next in October. I'll be bringing a Bitcoin focus to the next Blockworks event. Much to be announced there in terms of builders who will be there. So we hope to find you there at blockworks.co. You can find out more about Digital Asset Summit. Once again, this has been Supply Shock, a Blockworks podcast.